Hey, what's going on? Welcome back to my channel. In this video, we're taking a look at Helium's chart. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Jumping into the daily chart. So Helium has seen quite an uptrend from the bottom in June 2024. That was a 3x move to the upside. We peaked in September 2024. After that, we saw a retracement of approximately 34%. So I would say right now is a good buying level. We're also just above this support at $6. That used to be our resistance back in 2024, specifically April. We had multiple rejections from that level before we broke above it, and now we seemingly kind of back tested it as support. If we take a look at the RSI on the daily, we're very close to the oversold, not quite as low as the oversold, but we're sitting at 46. We were sitting at 34. Again, this is just another indicator telling us right now you're in a good buying position. Of course, you're not as cheap as you were back during summer. Like this period over here was an incredibly good buying opportunity for anyone looking to get into Helium. So you had a sideways channel for quite a bit, then you broke above it, back test of support in August, and then the continuation of the uptrend. What we want to be doing, of course, is we want to be breaking above the all-time high from February 2024. Rather, that's the local top, not the all-time high. My apologies. That's going to be our next major resistance level. We can set up a Fibonacci retracement to see what are our targets using this fractal. So we take the low from the summer low, July, and we take the top from February earlier this year, and we can see that $21.18 is going to be our technical target as the 1.618. And we're running into the 0.786 at $7.80. And right now we're hovering in the golden ratio. And the golden ratio is specifically the area between, or the golden pocket is the area between the 0.618 and the 0.5. And as you can see, this area has some confluence. This was our support all the way back in March. Then we broke below it, retested that level as resistance multiple times before breaking above it and back testing it as support. Even as early as January 2024, we were retesting this area as support. So lots of confluence in this area. Hopefully we can hold it as support and we can break above the 20 EMA. Seemingly the markets are trying to recover and go back into bullish mode. We'll see how that plays out, but at the moment we are below the 20 EMA, so no bullish reversals yet. You know, we could just bounce off the 20 EMA and then continue the downtrend, continue going lower, and potentially coming back down to $5.53 as the 0.5 Fibonacci. Of course, I would recommend setting up some buy limit orders at these previous local tops, because if we do see a correction, a further correction down, then your limit order will get executed even if you're sleeping. Now we can take a look at a Fibonacci retracement from the top of this move in September all the way back down to the bottom, and we can remove the larger fib. So this fib gives us the targets to the downside here, and the idea is we want to see what kind of support areas we can target. So we have the 0.5 at $4.97. This does line up nicely with this resistance from May 2024, just around 6 months ago. And also this back test of support in January earlier this year. So if you want to set up a buy limit order at $5 and then another one at $4.34, if you think we can go down this deep from the current prices, that's going to be at least another 30% to the downside, and then from the local top that would be a 50% to the downside. So keep in mind Helium also has been doing extremely well compared to other altcoins. For example, a lot of them peaked in March 2024 over here, around this same area. And then we haven't seen any, oh, sorry, this was the March peak. This is the April peak. And we haven't really seen any sort of recovery. But Helium, on the other hand, is almost retracing back up to the local top from February. So there is bullish momentum, there is buying pressure, and all of these things are, giving us good. Let's switch over to the weekly chart. And before we continue with the video, I want to give a quick shout out to my Patreon. If you're interested in getting more exclusive content, you want to support me as a creator, and you like what you're seeing here on YouTube and you want more, feel free to check out the Patreon. That's definitely a place for you. There's a 7-day free trial, which means you can get access to all of my content since the inception of the page. So that means you get podcasts, low cap gems, technical analysis, project reviews, and a whole bunch of other stuff. We try to do posts there on a daily basis. We cover airdrops and a lot of stuff that we don't really cover on YouTube because we don't have as much time. And of course, because patrons get more stuff and more content. And if you're interested in that, the link is down below in the description. Thank you all. Let's continue on with the video. And just before we do that, I want to take a look at the CoinMarketCap page. We're sitting at a $1.1 billion market cap. That's also important to keep in mind because you have to understand that a project that's sitting at a $1 billion market cap is not likely to do a 100x, because a Helium at $100 billion market cap is very, very improbable, to say the least. So you have to manage your expectations with these mid-cap projects. The all-time high market cap for Helium is $5.4 billion. If we were to get up to, let's say, 10 billion this time around, I think that would be a fair expectation, a $10 billion market cap, and that would put us at roughly $65 for Helium, which is going to break above the all-time high just by a bit. We're going to jump into the weekly chart and we'll see what targets we can be expecting here. So the 1.272 on the weekly is way, way above our expectations at $149. So do you think Helium can get to a 10 billion, 20 billion, or a $30 billion market cap? If you think a $30 billion market cap is possible, then $150 should not be an issue. A 20x from here is going to take us to around 140-ish dollars. I want to say 130. So it's going to be around the 1.272. So if you're expecting a 20x, the 1.272 should be a target for you. The 1.414 there is above $250. So if you think that is possible, of course, we all have our own expectations, our own personal targets. But the fib that we have set up for this chart is from the low in July 2023 to the top in December 2021. You can see the price is being compressed between this resistance and the support trend line. So at some point, we're going to have to see a breakout. Expansion is going to be the result of us being compressed between all of these EMAs and all of the resistance and support area. So once the price has nowhere to move, it is forced into a breakout. Sometimes we do get a breakdown, but if the environment is very bullish, which that seems to be the case, especially with the elections around the corner, it looks like we're going to be entering an alt season relatively soon. And once that happens, we could have an amazing move to the upside. Sometimes these alt seasons can be so bullish that we can see big candles in a few weeks taking us back to all-time high prices. That's not out of the question. Now, of course, $52 is a bit far-fetched for just a few weeks of price action, but you get the point. We can have very, very strong moves, and you have to be mentally prepared for that, because if you don't have your target set up and you see these big, big candles coming in, you're not going to be taking profits. You're simply going to be moving your goalpost higher and higher and higher until we get the crash, and then you're going to sell somewhere here, right? And that's not something you want to be doing. And in order to avoid that, you have to be taking profits on the way up. I cannot stress this enough. This is very, very important. So this Fibonacci over here, we've got the golden ratio at $12.30. That is going to be a major target that rejected us back in June 2022. So that's going to be a major target for us to break. Once we break above the 0.618, it's usually an easy way back up to the first fib. In this case, it's $52. So can we get back up to $52 before the end of the year? That's a big question. I personally don't think that's going to happen. But if Solana has a major run, then by all means, anything is possible. But we do want to stay conservative here on the channel. And then we have the 0.786 sitting at $23.36. Of course, lots of trading area around this particular price. So we ran into it as resistance back in 2021, and then we hovered around it as support in 2022, and then we crashed down from there. This was a very, very, very big crash of 97.8%. So from the current prices, if we were to come back up to the all-time high, that would be around 707%. To some people, an 8x is enough, and they're not going to be chasing those 10 to 20x's. For some people, they're looking for higher profit, right? Or more profit, bigger profits. So you have to understand that not all projects are going to get back up to their all-time highs. Not all of them are going to break above their all-time highs, and not all projects are going to get to your specific targets. That is very important to understand. So you have to consider Bitcoin, the Fed, the overall financial stability in the world, because if all of those things are pointing towards a Bitcoin crash, then you should probably be taking profits on your altcoins rather than waiting until your specific target is met because you like the numbers 200, so you want to sell at $200. That's not how it works necessarily. Let's take a look at the MACD here and see that, okay, we've printed a bullish cross over here in July 2024, just a few months ago. Before that, we printed the previous bullish cross on the MACD on the weekly chart in July 2022, so 2 years ago. And then we've been in a downtrend here for the first half of 2024. And this was a really good entry point, I'm not going to lie. Like, all of the indicators were giving us a really, really good entry point. And we bounced off the 0.236 here, around $3. This was an incredible entry point. So I'm very bullish on the chart. Unless we start losing a major support level like $2.86, I don't have any bad things to say about the chart. All we have to do is bounce off the 55 or bounce off of $5 here, and from there we just take out this high. That's the bullish scenario, and that's the only scenario that we can expect if we're going to be continuing this uptrend, because if we're going to be losing support levels, we're going to be running into these previous support as resistance, then obviously we're going to have more targets to the downside. Unless that happens, we're not going to be giving you any major expectations or any major levels to the downside. Of course, have your limit order set up at all times. That's extremely important because we never know when a flash crash can happen. But let's just quickly take a look at the RSI and the stochastic. So the stochastic is recovering. The 55 EMA is going to be a really good level for us to reach, and by that point I think the stochastic can roll over below the RSI of, or below the index of 20, which is going to put it back into that oversold area. And the same goes for the RSI. We can recover down here just a little before the next leg up, before we bounce off and take out that local top and then the local top above that. So the RSI, even right now, to be honest, if you're entering right now, this is not a bad area, but I would not go all in at the current prices because, again, you're up approximately 3x from the bear market bottom. You don't want to be going all in after you've done a 3x move, guys. But again, this is not financial advice. Nothing I say is financial advice. This is strictly my opinion. Thank you all for watching. Stay safe and take care.